I don't think real estates are really going to fall hard. They might come down some because interest rates could go up, demand could decrease a little bit, but the inflation coming in will help offset those other factors pushing them down. It sounds crazy. I don't think inflation truly is priced into real estate. And what does that mean? A lot of real estate is being sold based off of two factors. One, rent. The higher the rent is, the more the net profit is. So higher rent usually means higher net profit, which determines the sale price of real estate. So inflation could cause an effect to increase rent, but there's also supply and demand. So we need to calculate, is it inflation or is it supply and demand? Part two to the equation, your mortgage payment is on the expense side of the equation. So on the expense side of the equation, we have your income minus your expenses equals your net income. The net income determines the price of your property. So if you lower interest rates, that lowers your expenses, which increases your net income, which makes real estate more desirable, which increases the price. So we have supply and demand causing prices to go up in rental property for just the rent side. We're gonna ignore the sale price. And we have the rent side going up. We have the mortgage side going down, causing the net income to increase, which makes the sale price higher. That does not account for the fact that money is going to continue to grow in our economy. Things are going to be going up in value. People are going to have more money, causing this inflation to happen, which then could be a second wave of keeping the real estate prices high. Now, I want to point out, I didn't say going up, I said high, because a lot of people think real estate prices are going to fall hard. And as I've been stating before, based off of all the things that have happened, I don't think real estates are really gonna fall hard. They might come down some because interest rates could go up, demand could decrease a little bit, but the inflation coming in will help offset those other factors pushing them down. For the real estate prices to fall, it would have to be a significant increase in interest rates, and we would also need to see financial markets become compressed and have significant issues. In 2008, the issue isn't that people went to foreclosure. People keep saying, oh, well, everyone's going in foreclosure. There's always been foreclosures, and there've been a significant amount of foreclosures. So what affected the market in 2008? What affected the market in 1980? Both factors is not that there was a significant amount of foreclosures. It's the factor that the lending market, the subprime market, was destroyed. In 1980, the savings and loan crisis, all the savings and loans, most of them went out of business. We didn't have an issue that there was too much real estate for sale. We had an issue that everybody that wanted to buy real estate couldn't, or most of them that wanted to buy real estate couldn't, because they couldn't get the loans. It was a financial crisis. So unless we have a financial crisis that causes to become difficult for people to get more loans to buy properties, that is going to cause the real estate prices to fall hard. Not that there's going to be a whole bunch of properties available to purchase, because we have a very, very low supply of real estate right now, and that supply is causing the issue. So, or the lack of supply, basically. So the point is this: we're not gonna have a problem unless the financial markets crash. If the financial markets crash and we have a gluttony of real estate hitting the market, then we're gonna have a problem. Otherwise, I don't really see us really having a problem in the near future. Now, do I see that something gonna come up in, say, 2 to 3 years from now? Yes, in 2 to 3 years, I can see things having a problem. We have enough cash right now that is kind of like drugging the system to keep it moving. But the reality is it's kind of being drugged. So we're not really gonna know, did the system recover until another year or two.
Do you or your your team do private lending other than accredited investors?
So those are two very different questions. So private lending, one, are you asking, do we get private loans or do we give private loans?
Yeah.
Part two, other than accredited investors, what does that mean? An accredited investor is an investment partner. They put their money with us as we go and buy more properties. So the point is, one, do we give loans? Yes, we do. We do provide lending for investors. So we're full service. I have an accounting firm that focuses on high net worth individuals, companies, and real estate investors. We have an insurance agency that does the same thing. We provide insurance for the rental property, for people's personal homes or cars, umbrella policies, GL for companies. And we also do the mortgages, 1 to 4 family purchases for individuals and for landlords. Now we have another side of the business. I have a real estate investment company. I buy properties. People approach me and ask to invest with me. And if we hit it off, we have a good relationship, I let them partner with me on deals. They put their money together, I put my money together, and then we go and get a bank loan, and the bank will give me additional money to purchase and remodel a property. So in the example where we bought a property for $900,000 and did $300,000 in remodel, the total is $1.2 million. We only needed to raise 25% down, plus cover the closing costs, and have a little bit of cash on the side for incidentals in case things cost more than expected. But the point is, the bank is funding our rental budget, and I get a 4.5% interest rate. So I get a great deal from the bank on a remodel loan, and I bundle my cash together with investors, so we're able to pull a very high return on investment since we don't have to front all of the remodel budget out of pocket, and we're not getting a hard money loan that's like 10, 12, 15%, or a bridge loan. We're getting our loans at like 4.5%. So we're getting great deals. So that's been really helping our profitability as well.
So you want to go with HH there? He just reworded that question when he was asking the lending versus.
I had to reword that. Sorry about that. Just meant private money, hard money, not 506. So the thing is, I do both, right? Like I get a bank loan that covers the remodel, and I partner with people. Now I'm not doing 506s. These are little partnerships. They are part owner of every property that I buy. So they're not an investor, they're a partner. I actually haven't done a 506 yet. So when someone wants to partner with me, we have an interview, we get to know each other, and we understand, and they become an actual partner in the deal. They interact with the deal, they have a say, and what their say is considered in my deal. This is different than give me your money and sit back. Now, if a person wants to do that, there's some people that do that, but there's some people that are like, tell me what's going on. What are your plans? How are you going to do it? And that's how it's a partnership. So, but again, I do both. Even if I do 506s, I'm still going to do both, because if you can do a 506 and take no bank debt at all, or you can do all by yourself and get bank debt and have no partners, or you can do last, which is what I'm doing, which is taking debt and partners, so our ROI is very high.